Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. And let's just say our subject today is making some significant moves in China. But are they good moves or moves that might come back to bite them? Hewlett Packard Enterprise Company, or HPE, has just filed an 8K report detailing some major agreements concerning its stake in a Chinese subsidiary called H3C Technologies Company Limited, or H3C. This filing tells a story of divestment and strategic shifts. This report is coming out on the 17th of November 2025, and it's all about deals happening on the same day. So it's very current. This particular filing is a Form 8K, which companies use to announce big events that shareholders should know about right away. Think of it as the corporate version of breaking news. The company we are looking at today is Hewlett Packard Enterprise Company, a name most of us are familiar with in the tech world. They've got common stock listed on the New York Stock Exchange under the ticker symbol HPE. They also have some preferred stock, which is a bit more complex, but the key takeaway is that these are publicly traded securities. Now let's dive into the main event. Item 1.01 tells us about a material definitive agreement, which is just a fancy way of saying a really important contract has been signed. So here is the situation. HPE's wholly owned subsidiary H3C Holdings is selling off a portion of its ownership in another company called H3C Technologies Company Limited, or H3C. This isn't just one deal, but actually 5 separate share purchase agreements. They are selling to 5 different entities, all based in China. They are selling a total of 10% of H3C shares. Think of it like selling a 10% slice of a pie. And they are getting quite a hefty sum for this slice, about 714 million US dollars. That's a significant amount of money. Let's break down what it takes to make these deals happen. A major condition is that all these Chinese buyers need to get the green light from their own government. This is super important in China and can sometimes be a long and complicated process. H3C Holdings also needs to provide official proof that its board of directors has approved these sales. To raise also a mention of Unisplendor Corporation Limited, the parent company of one of the buyers needing to approve the deal. This adds another layer of approval needed, and for some of the buyers who aren't Unis, they have to give up certain rights they might have had over these shares. This is basically clearing the path for the sale to go through without future disputes. The deals have a deadline called a long stop date. If all these conditions aren't met by this date, which is about 180 days from the 17th of November 2025, then either HP or the buyers can walk away from the deal, as long as they haven't caused the problems themselves. They can even extend this by another 30 days if needed. On top of these 5 agreements, there is also a side letter with one of the buyers, Unis. This side letter actually amends a previous agreement from May 2024. The key thing here is that Unis is giving up its right to be offered these shares first. This means HPE doesn't have to offer them to Unis before selling them to someone else. Now, this 10% sale is part of a bigger plan. HPE is looking to get rid of pretty much all its remaining stake in H3C. They explicitly state their intention to dispose of the remaining 9% of shares. They plan to do this either by using an option they have to sell the shares, or just by selling them directly. This suggests a full exit from H3C is on the horizon. This is a pretty strong signal. They're not just selling a bit here and there, they are aiming to unload the rest of their stake. The filing also includes a standard disclaimer, reminding investors that these agreements are for informational purposes and not a guarantee of HPE's financial health or the truthfulness of the statements within them. It is a legal sire, basically. And then there are the forward-looking statements, a section full of cautious language about potential risks and uncertainties. They are basically saying, we hope this works out, but things might go wrong. Finally, we have the signature block confirming that David Anzac, Senior Vice President, General Counsel and Corporate Secretary, has signed off on this report. Alright, let's cut through the legalese and talk about what this really means. HPE is cashing out on a significant part of its investment in H3C. They are getting $714 million, which is great for their balance sheet in the short term. This move signals a strategic shift, likely to simplify their business structure, reduce exposure to certain markets, or perhaps to fund other growth areas. The fact that they are selling to multiple Chinese entities and that Chinese government approvals are a major hurdle tells us this isn't just a simple transaction. It's deeply embedded in the Chinese regulatory landscape. The waiver of rights and the side letters amendments show some complex negotiations have been going on to untangle HPE's relationship with H3C and its other stakeholders like Unis. The intention to sell the remaining 9% is the most significant part here. It strongly suggests a complete exit from H3C. This could free up capital and management focus for HPE, but it also means they are walking away from a business that, while perhaps not a core strategic fit anymore, was still a significant asset. We need to remember H3C was previously a joint venture with Huawei, and HPE bought out Huawei's stake in 2019. So this sale represents the end of that chapter. The question is whether they got the best price possible or if they felt pressured to divest quickly. The risks outlined in the forward-looking statements, such as delays in approvals or unexpected costs, are very real, especially in international deals. Given the current global geopolitical climate, cross-border transactions involving China can face significant headwinds. Looking ahead, HPE seems to be streamlining its operations. This sale could be part of a larger strategy to hone in on its core strengths, perhaps in enterprise computing, cloud services, or whatever new ventures they are pursuing. But exiting a substantial stake, even for a good price, always carries the risk of missing out on future upside, if that business were to perform exceptionally well. In conclusion, HPE is making a substantial strategic move, selling a significant portion of its stake in H3C for a considerable sum. This signals a move towards divesting from that particular business. While the cash inflow is positive, investors will want to watch closely how this capital is redeployed and whether this move truly enhances HPE's long-term growth and ability. Alright, that is our breakdown of Hewlett Packard Enterprise's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.